Okay, so next one is choosing a market. Now, it's very, very important, guys, when we're choosing a market that we pick the right one for us. Now, I'm definitely not saying that we need to be here, there, everywhere, doing all sorts of stuff and diving from market to market, and we'll talk about that in a second. But we need to look at the market we're going to trade and stick to it. So, I'm going to run through these four and we'll talk about them in detail. So number one, which market will you trade? So what we need to do, preferably, is we use prior trade data. So the ideal scenario, and we've got to kind of fall back on this if we don't have this, is we go back our trade data and we say to ourselves, all right, this is my trade so far, i.e. my account statements. This is the markets, I've been trading. These are my results. Oh, okay, so I know that I've had some success in this specific market, whatever that may be. So it makes sense to focus my efforts at least on that. Maybe I'm going to add a few more markets into the trading plan, but it makes sense to focus my efforts on that because I've shown competency for it. I can see it with results. Now, I recognize that may not be available to you, okay? So we'll skip to 4 here straight away. Gut feel is okay, because we just want a starting point, guys. In a perfect scenario, we're going to have a look at all this data, trade data, and go, you know what, I've had good success trading this market, and we're going to put that in our trading plan. But I recognize that may not be available. So just start out with something. If you feel it's Euro USD, stay there. If you feel it's gold, say that. Just starting with something. We're going to get to the point where we're iterating and we're going to develop the trading plan. But this point is just to start off the trading plan, just to get going and build from a foundation. So, which market we're going to trade? We're going to look at prior trade data if we've got it, use gut feel. But the other thing that we need to mention, which is part 3 here, probably should be part 4 really, is to use our current commitments and status that we did in the previous slide. So, the time you can commit. So we don't want to be trading something that we can't be actually physically there to trade. Example was, hey, I want to trade the European indices open. Well, if you're not there at the screen at that time, then you can't do that. So the market you choose may well have to, well, it will have to fit in with your lifestyle and current commitments and status. And again, we're talking about time commitment, we're talking about funds available. So, for example, if you have the evenings to trade, then UK indices day trading, or European indices, isn't going to be useful for you. If you're back and available to trade kind of from 7 p.m. UK time, by the way, I'm just saying UK time because that's what's in my head and I know you have to relate to your time zone. You might be able to day trade the US indices, US equities into the close if you want to day trade. If you want to swing trade, then you might be able to trade a lot of things, because whilst the European markets are closed, you can do analysis and have opening orders for the next day if need be. If you prefer to be able to trade something that's open, then obviously the US markets are open and you can trade those in the close, or you can amend your orders and adjust your portfolio or swing trading portfolio. You might even look to trade Asia. Let's flip it on its head. Let's say you've only got the mornings to trade. Let's say you're busy all throughout the day into the evening, but you've got a kind of window from, let's say, 7 a.m. till 10 a.m. Then maybe you can trade if you want to do day trading. We'll get to talk about style in a second, and strategy and a kind of time frame. But perhaps then actually digging and getting involved in the open is suitable for you. If you're on a swing trading thread, then perhaps you can say, okay, well, actually, I can look and see what's moving on the European markets, place a trade looking for the kind of 4 or 5 day multi-week move, whatever your time frame may be, and that fits in well. So it's picking around your lifestyle. Don't forget currencies as well are 24/5. But if you've got to remember, guys, if you're trading GBP USD at 3 o'clock in the morning UK time, Americans aren't trading and UK's not trading. Yes, it's 24/5 and people can trade it, but the point is you ideally want to trade a currency, especially if you're day trading, a currency that actually has the cash market or equity market open. Okay, because that means volume is going to flow back and forth and kind of to the currency or out of the currency. There's more order flow and that'd be more suitable. Now, of course, if you're swing trading it, currencies might be perfect for you because you can look at it 2 o'clock in the morning, 3 o'clock in the morning. If that's the time frame that's suiting you, and then do your analysis and do all the things and bits and pieces that you want to and need to. So it's about looking at your current commitments if you're starting from scratch. If you're not, it's about the prior trade data. And like I say, gut feel is okay. You know, if you're starting completely from scratch, pick something and go with that. We're going to iterate, we're going to improve and move on from that.